What is good, Tesla family? It's Ray J back with another video. And in this one, I'm going to break down what's going on with Tesla, SPY, Nvda, the QQQ, and a couple of other tickers. I'm going to break down what the news is saying about the markets, what data just came out this morning that's affecting the markets, what you should be watching for as a Tesla investor, as we have some important resistance levels to be discussing. But before I break anything down all this information, before I get into any more details, let me just mention a couple of things. I am personally not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 to the account, you're guaranteed up to 5 free stocks. If you put in $1,000, you're guaranteed up to 15 free stocks. The offer ends today in just 12 hours. Check it out before they run out. Anyways, let's break down what's going on with the market. Looking at the market, we saw the market pop very nicely after the PPI report came out, but the market's starting to decline a little bit. So we're going to be watching if support holds and how this ends up affecting Tesla. So what data came out? The PPI data came out aligning with expectations, if not below expectations, which is bullish for the markets technically. PPI month over month was down 0.5%, and that's below expectations. Core PPI month over month was basically 0%. That is below expectations, showing signs of inflation declining. It's good data so far. Core PPI year over year was 2.4%. This is once again below expectations. And PPI year over year was 1.3%. So wholesale inflation is once again declining, which is technically good for the Fed's policies. Now, later on, we have Barr from the Fed giving a speech at 9:30 a.m. Eastern Standard Time, and then at 11:30 a.m. we have the 17-week bill auction coming out, and then Barkin giving a speech at 3:30. So, a couple of Fed speakers, some bill auction data, and that's pretty much it for now. Target ended up jumping after the retailer posted a big earnings beat, even as the sales fell again. But their guidance was kind of mixed because they mentioned that the holiday quarter could look basically the same as what we saw the previous year. And once again, it's not that horrible overall, just kind of mixed here and there, but good earnings so far. On top of this, a couple of things to know about the markets. Cool inflation, hot market, that is correct. The PPI and CPI data have been in favor of inflation cooling, which is incentivizing the Fed to pause or not give us any more rate hikes. And we had some good news come out, I think, yesterday about the government shutdown, or like for avoiding the government shutdown, as the House passed a funding bill with bipartisan support, sending it to the Senate. That's some pretty decent news. We'll see how this progresses over time. So far, so good. With mortgages, declining rates last week fueled mortgage demand, hitting its highest point in 5 weeks, according to the Mortgage Bankers Association. President Joe Biden is going to meet President Xi Jinping of China, basically in San Francisco, very soon. Target post a big profit beat. This is once again worth noting, not bad for them. And finally, Apple gets, according to Sundar Pichai, Apple gets 36% of Safari search revenue from Google. They're mentioning some very, very interesting things right now, and there are going to be changes going on right now. We're also seeing some litigation going on, so we'll be watching this very carefully. That's pretty much it for now. Just as a reminder, SPY doesn't have too many options for today or tomorrow expiring, but for Friday, we have a big amount of options expirations. We have almost 3 million puts, so make sure you're prepared for Friday. It could be a very wild day. For Tesla China is seeing 12,700 insurance registrations for November's second week. And then they also saw 14,000 during the previous week. So that puts them at a total of over almost 40,000 basically in total. I'm sorry, almost 23,000, not 40,000, 23,000. I don't know what I just said. That's not bad for them whatsoever for November, and those are some pretty good numbers. We'll see if this continues for them. We want to see some good increases, and we should be seeing a very strong end from this point on. I want to see better numbers from them, so we'll be watching this very carefully. Anyways, for Tesla, we're going to be watching some important technicals. Tesla popped even more, and yesterday I was saying Tesla could hit 242.5 to 245. We had a bullish wedge, and this played out. We did see Tesla kind of hit that level during the pre-market, and now when you look at the chart, we're actually starting to show some weakness. We have a bearish divergence that develops in the 30 minutes time frame, also on the hourly, and this time, okay, I know these don't always play out, but this time it's looking like it might play out because for the past hour, Tesla's been slowing down. So is the market. So there's going to be a risk of some downside very soon. So for Tesla, we're going to be watching 239.6. This is where our 20 EMA is acting as some support. If we lose this, 238 is next. If we lose that, 236.5 is coming to fill this gap. If we end up losing that, there's 235, and then our next support below this will be 232. If somehow there's bullish news and Tesla starts pushing, watch 242.5 is resistance, 240, 242.5, 245, 247, and 250. My gut is telling me we might see some downside. We're going to fill this gap and see Tesla decline to at least 235. I think that we're starting to show some exhaustion after pumping so much. So we might see Tesla decline with the overall market. On SPY, we're seeing something very similar developing. SPY also has a bearish divergence on the 30 minutes time frame and also on the hourly, and we're starting to crawl on the MACD. We're going to be watching the 20 EMA at 449.6 as support. If we lose this, we're going to decline to the 448, in my opinion. If we lose that, 447 is coming for a 50 EMA test. There's going to be a risk of some downside. We finally have some signals suggesting the market is getting exhausted. But just to be safe, we're going to be watching this level. We're going to be watching this unfilled gap down here. So for resistance, watch 450, 451, 452.25, and the 453s, which is where we have historical resistance and some rejections in the past. For support, you're going to be watching once again the 20 EMA, which is where we're at right now. If we lose this, watch this gap fill at 449, 448.6, and if we lose that, 447.5 is coming, 446.5 below that, and even more downside. The odds do favor this thing now starting to decline a little bit, but just to be safe, we'll wait and see what happens during open. We're starting to look a little weak right now during the pre-market. Looking at the QQQ, we also happen to have something very similar developing. The QQQ has a bearish divergence on the 30 minutes time frame. I was talking to you all about how we have this tight resistance at 390. I said that yesterday. We hit 389.5 and we're starting to decline from here. This could be another liquidity grab. So we have a double bearish divergence that has developed on the 30 minutes time frame. These don't always play out, guys. I know that, but this time it's looking like the market's showing some weakness and there's going to be a good chance of it playing out. So if we're bullish, you want to break 388. If it breaks, watch 390. If we're bearish, you want to see it lose 386. If that's the case, we're going to be declining to 385, and we're going to fill the gap down here. It's starting to look a little bit more bearish. We might see this thing start approaching 385 again, and if that fails us, 384 is coming at the 50 EMA, and if that fails us, we could see it start to sink even lower. But watch support, especially at 384. If we lose 384, we could get very close to like the low 380s, so it's looking a little bit more bearish. Just want to be careful just to be safe. On Nvda, this thing attempted to break out, but it's starting to fail. So it was trying to break that 500 resistance, and it came just short. If we're bullish, you want to see it break 500, break 502, and then push up for 504. If we're bearish, you want to see it lose 498. If that's the case, 495 could be coming. Right now, it's starting to decline. We're at 499, but we're going to be watching our 20 EMA on the 30 minutes time frame. If we lose this 499 support, I anticipate it's going to come all the way down to 495, and if that fails, even more downside is likely going to be coming. So with the bearish divergence on the 30 minutes time frame, I think the odds favor even more downside. So we might see Nvda decline a little bit, and we're finally starting to see resistance getting control. On Aapl stock, I think something very similar is developing. Aapl has a bearish divergence on the 30 minutes and also on the hourly, and these are starting to show signs of playing out. I know they don't always play out, but this time it's starting to show some life because the market's starting to show some signs of exhaustion. If you look at Aapl, it's starting to break below this support right here. Even if I try to retrace a little bit, we're just barely holding this. If we lose this support, you're going to be watching for a decline towards 187.25. If that fails us, we're going to be coming down to 186.6, then 185. If we're bullish, you want to see this break out, try to bounce and break 188.5 to push up to 189 plus. Right now, looking a little bit more bearish. We might come down to fill this gap at the very low 187s, and then 186.6 could be coming. So it looks like the market is starting to show some signs of exhaustion. It's been pumping very hard. We're starting to see some potential liquidity being grabbed. This may lead to some declines in Tesla and the market. All right, so that's my warning for everyone. We might see some declines. Please be very careful. Make sure you watch support. And the odds are starting to favor a pullback, which could be coming very soon. All right, so watch your charts, do what you have to do, guys. I'll see you guys in the next one. Thank you, and peace out.